Hey, I guess we lost music. Did I lose internet? Are we good? What's going on? I think we're here. So, hey, happy Friday. You made it through another week. You're still alive. Might as well get out of bed and do some trading, so let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to Forex.Today. My name is Wayne McDonald. I will be your guide and your host today as we conduct technical and fundamental analysis with the overriding goal of putting together trade plans for today. So yes, thank you for being a subscriber. Thank you for your positive energy and your contribution to the community. I'd also like to thank Traders Way for being part of our community. Hey, we're traders and we need brokers. We need brokers that not only execute our trades well, but actually somebody that we trust. And so I trust Traders Way. Maybe you will too. Please give them an opportunity to earn your loyalty and respect by visiting tradersway.com. All right, good morning. I need some more coffee. Give me some coffee, baby. Give me the juice. I gotta move. Give me the juice. All right. Cool. All right, we have some Japanese yen weakness. We have some US dollar weakness to maybe a little bit of strength. Okay. Okay, Gordon, I can go back through that. I've done dozens of videos on how to read the COT report, but I could do some more. So yeah, we can get to that. Might be better to do it on Monday, though, because the data updates today, late this afternoon. So, all right, so Aussie strong, Euro strong, CAD weak, Kiwi weak. I bought the Kiwi last night, lost money. Stupid Kiwi. It was a perfectly flawed trade. Pound has been weak, has been strong, then weak, and then strong, and then weak, and then strong. And then Swissy's gone from weak to strong. So the two things, I guess three things have probably lasted throughout the entire week. Yen weak, yen weak, dollar weak, Aussie weak. Cool. So I wanted to show you something. I did some research, and I found this. Obviously, I used CNBC.com, but anyways, I was looking at Aussie dollar, and I correlated it with the S&P 500, this little choppy dotted line. That's the S&P 500, and the blue area is the Aussie USD. Yes, I'll take care of you if you didn't get the code. Yeah, so I think what people do is they cut and paste the coupon code instead of typing it. And then it says, I'm not going to give you the coupon. And then you're like, well, I think it's going to give me the coupon anyways. And so and you go through, and then it's like, I charge you. But yeah, email me and I'll give you a refund. All right. All right, so cool. So you see that? Do you think there's a bit of a correlation? Like twins? Well, maybe 2 days. Oh, you emailed me? Awesome. I've been at my desk for a couple hours. I haven't seen it, but I guess I haven't been checking my email that closely. Where's the other chart? I guess one chart overlapped the other chart. Anyway, or maybe this is it. No. Maybe it's just here. Hang on. I guess it didn't pop out. That's what it was. USD Japanese yen looks even better. Okay. Once again, this is the S&P 500, and this is the Aussie versus the Japanese yen. Now, here's the interesting thing. If they're similar, notice that the Aussie dollar is a better beta. When the stock market is down, the Aussie dollar is down, or let's say Aussie versus yen. The Aussie yen is down too, but by significantly less. And then when the stock market is up, Aussie versus yen is also up, okay, but by less. The change is less, which means it's actually less volatile over that period. Interesting, right? Same thing with Aussie versus US dollar. When the stock market's way down, so is the Aussie USD, but significantly less down. And then when the stock market is rising, the Aussie dollar is also rising, but at less of a change, which again is less volatility. Same directions with less volatility. So that might actually help in a sales pitch if you could explain that and say, oh, well, how would you like exposure to a rising or falling stock market, but with less volatility? You said you can tell your customer that you can mimic that with less volatility. Cool, right? Okay. Neat, right? All right, cool. Let's run through the gauntlet. Start with commodities. Today is going to be the day. Just try to, okay. Let's change this up so we can see what the plan is. How do you feel about the plan now? Okay. See? So it's supposed to fall so we can buy it if you're a bull. Currently, the buy zone is down here at 56 bucks. Maybe 55. Okay. Take a look at Goldie. Once again, what I've been saying is, yes, this is clearly a buy if you're very aggressive. But what we've been waiting for on gold is a higher high, higher low to reduce our risk. And now you can see why. Okay. What we want to see is this. And for those that were were aggressive here, you're going to have a decision to make soon, and you'll probably just take your profit and try again next week. For those that entered late, you got punished, and it's your fault. Cool. Okay. So taking a look, you'd have to go all the way out to next week, but you can see we're really truly just ranging. That's how I look at this. Okay, so if you're going to buy it, you're probably going to buy it way down low, excuse me. Way down low. 1750 is probably your buy. Okay, because it's not trending. Bitty, 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 can't you see? Cool, it's going up right now. And I got a little trade going on. Not on this platform, though. I'm not going to be able to do that. So I got to keep my eye on that. So I want it to go up. As you can see, the trade plan. You can see in here is the buy zone. And hopefully rally up. And maybe trade it into the weekend. Hey, no worries, Johnny. I got your email. I appreciate that. Okay. Interesting, huh? Ultimately, the target, it shouldn't go above 50. That's what technical analysis tells us. Now, the psychology of the market might be different, but technical analysis for the month is saying we shouldn't go above 50. But of course it could. I was trying to see my price. I don't think I have a price. Can't pull it up on my phone. Boo, can't pull it up on my phone. I'll do it later. So anyways, up is good for me currently. And so far it looks fine. You can see the technical analysis here. Higher high, higher low. So if we go back 1 week now, I think this was what we did a week ago, wasn't it? Down for up. Okay. Higher high, higher low, higher high, higher low, higher high, right? This being a roll reversal. Okay. This is this week. So if you are a bull, you're thinking of going to R3. I know it can do it. I just don't like, I don't like planning on going to R3. But what can I say? Well, they're all just combinations of the same tools. Okay? So, for example, this clearly is a monthly pivot, right? You can see because it started on the 1st of February and has lasted the whole entire period. So what are these things that last approximately 5 days? Oh, those are weekly pivot points, right? So if you're a bull monthly, your general plan is this, okay? Straight out of the swing trading course. The most basic bullish swing trade you could have for the month is buying in this blue area, okay? Which occurred. Why? Because that's how you trade. It's just that it's basics, right? It's elementary math. It's ABCs, okay? So a bull is buying in this zone. Okay, so that you have to start with that. That's the general strategy. It's like, where are we going? Well, you know, I mean, it's aiming. It's where are we going? It's the strategy. Then inside of that, then you're going to have swing trades, right? So we know this is the best buy zone for that first week. This is a best buy zone for that other week. And here's the best buy zone for next week. And you're like, well, we didn't hit most of those. Well, it's because you're supposed to be doing it early. You're supposed to be front running, right? So up, 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 down, down, buy. Up, 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 down, down on a Thursday or a Friday, that's a buy. Up, 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 down, down. See? We're already in next week's trade. And so that's why we're combining these things. One is a strategy, and the others are tactics. Okay? So this is why the swing trading group meets on Thursdays, because by the time you show up next week on Monday, we'll already be at 50 or above, and we plan that, days and days and days before, ahead of time. Okay? The shifting of the pivots, well, we project forward. So this is next week's pivots, and we've already traded them. So shifting them, shifting them, I'm projecting them. You mean shifting next week so it overlaps this? Look, at some point you just have to make a decision. Okay? Right? At some point, you have to be able to just read the tools. Because I think what's going to happen is then you're going to start shifting this and this and this, and sometimes it works and sometimes it doesn't work. You have to make a decision. So if you bought here on Monday and you find yourself way up here on Thursday and it's dropping, and you have to be able to say, oh, well, we're at Monday's price, I'm going to buy it, and you're gone. Okay? So somebody asked me the other day, like, how long do swings last, and what days do I typically trade? And I said, like, typically Wednesday into Thursdays, right? Like Wednesday's an exit, to Thursday's an entry. But the Wednesday-Thursday exit typically happens based on stuff we planned the previous Thursday. That's done. And then on that sort of Thursday-Friday period, we're setting up next week's trades. So by the time Monday or Tuesday shows up, we're almost done the entire week. And very often, like I said, then Wednesday to Thursday, you're taking profit and you were done. Okay? Many people, I guess, because they've been trained through, education and trained through having a career, you show up on Monday and you do Monday's work. And that's not how trading works. Trading, even when we're talking about the stock market, is based on your best assumption of what's going to happen 6 to 12 months from now. Okay? Now you say, well, what about earnings? Well, earnings are the update. Earnings season is the update. Are they on trend or are they not on trend? But if you don't have an opinion where a stock's going to be in a year, then forget it. Like, you're not doing it right. You're buying it because of price. You're buying it because they talk about it on TV. Like, for example, when I teach you guys how to trade hurricanes, the whole idea of trading weather is to get in the trade before it gets on CNBC and the Weather Channel. So if it hits CNN and they have some dude on the beach like, this is the worst hurricane we've ever seen, because it's always the worst. They can't say, well, it's mediocre, nobody really cares, you should probably not watch the Weather Channel anymore. No, they're going to say it's the worst. Look, I'm ankle deep, right? So they'll be on the beach going, this is the worst hurricane, but you should already be in your trade. You can't say, oh, everybody on the planet now is aware of what's happening, now I should do something. You can't do that. It's already happened. So, it's all about forethought, even if it's malice of forethought, right? So again, what day is it today? It's Friday. I'm already done next week. Now, the trades haven't executed and the trades haven't run and trades haven't hit targets, but the plan is done. And it comes down to sometimes, like I pulled the trigger yesterday, I bought Kiwi yen and it failed. I had the technical reason and stuff, but most of what we talked about yesterday was how we actually expect the Japanese yen to get strong. So I not only, but it turns out the yen really didn't get that strong, just the Kiwi weakened, and I don't know. My horse didn't cross the line, right? Okay. Anyways, yeah. So monthly, weekly, Okay? And then inside that, of course, is daily, 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 daily. Okay? All right. So Bitcoin is going up. I need it to go up. I got some money on it. I want to make more money. Great. I guess we got to do the next one. We'll do exotics. USD or ZAR all over the place. Meh. Now, what do you think? Was it unpredictable? Isn't that interesting? That's right, William. I lost money, so I bought it. I had a high low in Asia on the right type of price. I think it was a daily pivot. So I put a trade on, and it didn't work. Like whatever. And it was mostly, I thought it was yen, but it turned out it was Kiwi. And they're day trades. So it's a day trade, and sort of a day trade into a swing trade. But I sleep at night. So it's one of these things where it could have worked out. I had all the reason to do it. So I took a shot on goal and I missed. Not a big deal. Anyways, so isn't this right? Isn't this just great where it's totally predictable that we stall out here? Very cool. Now, if you're a bull, you need to be front running. Okay? But market conditions are still bearish. So that gets you the problem, right? So a bull is thinking, okay, traders are going to exit, okay? And therefore they buy, right? In fact, a bull would probably think, okay, exit occurs here, it rallies up, it comes down, then they can buy this as well, and then it'll make a higher high, higher low, roll reversal on the central, and so now they got Friday, Monday, and Tuesday planned out. Right? Now, if you back out, there should be a little bit more juice on this. Based on our monthly analysis of this pair, we should be able to get down to 14. So I should be able to make another 500 pips on this. If not, too bad, so sad. So what I'm doing is I'm looking at the monthly. This is the monthly sell. Here's the monthly target. Okay? And all we did is hit our weekly target. And we talked about this on, was it Wednesday or Tuesday? I think it was Wednesday. The weekly plan was sell here, and that was actually where I sold. And the target is here. So people are like, Wayne, you could take profit here, right? Yeah, I could. Yeah, yep. But I'm also looking at that. So is it the right thing? No, I didn't say that's the right decision. But it's a decision. Okay? Most amateur traders don't even realize there's a decision to be made. So I'm more kind of teaching about, hey, there's a decision to be made. What would you do in this situation? So that's more of what I'm trying to do, right? Steve says, is there a video that explains his pivots? Well, I talk about pivots every single day that I've posted a YouTube video over the last 15 years. But if you want to learn, so let's say I'm speaking to a general audience here. Apparently there's a few newer people, which is cool. Welcome. Make sure you subscribe. If you go to fxbootcamp.com, there's somewhere between 35 hours and 50 hours of training videos that I've created over the years because people ask me for them, like you're asking now. The training courses are 76% off right now. They're almost 80% off because of COVID. 80%. So if you can come here every day for free, and over the course of a few years, you'll pick everything up. And I swear to you, I'll do my best to give you as much value as I possibly can in these free webinars. I'm not going to hold back. But if you want to get on quick, Steve, just go to fxbootcamp.com, put in a credit card. It's just a few $100. It's not thousands. Okay, it used to be thousands. And then you're in. I mean, get on the clue train, right? The other thing is you'll be invited to join my live trading group, which meets right now twice a week. One, we're doing macroeconomics. The other one, I'm doing swing trading, setting up trades in advance. So that's $99 a month. Not 200, not 300, not 500. So it's really, I mean, I don't know. It shouldn't be a hindrance. So maybe that's a choice that you would like to make. You're welcome to join. Okay. So I started FX Bootcamp in 2004, I think. So it's been around. Cool. So now let's take a look at Euro versus ZAR. Okay. And it's still doing all right. It's still doing all right. Honestly, I thought it would stall out. So it's actually doing a little bit better than I thought. But to analyze, is it doing what it's supposed to be doing? Well, this we know is a perfect entry short. I was conservative on that. And so instead of that one, I took the US dollar for the rotation that we discussed earlier. But we're supposed to be down here based on this entry, right? Which we predicted 1, 2, 3, 4, 5 weeks ago. But we haven't got down there. So the rate of change is slowing. The Euro Rand isn't fulfilling its destiny. But that's the funny thing. When we got to this point, we talked about it being a point in which it should turn mediocre. And it has turned mediocre. So maybe just next week it'll fart around and finally get down to that 1750 level. Okay. I think my first trade is up 600 pips. I don't know. Let's look. 620 pips on the first one, 440 pips on the second one. And that pissy little dollar trade is up 225 pips. Okay. So really, I haven't made any money since yesterday, except for collecting swap. Okay. So so what was it? On Monday, I made 150 pips. Tuesday, I made 150 pips. Wednesday, I made 150 pips. Thursday, I made nothing, except swap. All right, $20 or something plus swap. So I made 25 pips, and not 150. Oh, well, can't win them all. Martinez says you don't make money if you don't close it. Actually, that is not true. That is not true. In a stock market, that is true, but we're mark to market, Martinez. And when you're mark to market, these profits are in my account. They're floating profits. I'm already paid. So I don't have to cash out. It's already in my account. My equity is floating. It's going up right now. See, look, it's going up. So when you're in the stock market, it's not real money because they say, well, the theory is you own this asset and now you could go out and sell it. And when you go out and sell it, you will get paid. In Forex, we're already liquid. So it's already in there. Martina says, yeah, but when you go to sleep, you could lose it all. Really? If you do fundamental and technical analysis, you will be able to sleep at night. Like, for example, you're right, it could. There could be a black swan event that devastates the entire global economy. It's true. It could happen. But it's 99.999% not likely to happen. But it could. On these trades, for example, I think I locked in 200 pips, right? So let me lock in more just so Martinez can sleep. So this one's got, what is it? I can just barely see it. 250 pips profit. And that's on that one. And then we can move this one now. And, let's move this one to 100 pips profit. Hang on. They're overlapping. It's hard to see. Let's move this one. I'll lock in 200 on this one. And I'll move this one. All right. So now, Martinez, if there's a global tsunami that shuts down all the economies around the world during the weekend, okay, I should make 300 pips on these two trades. But it's interesting that the psychology of what you're saying, like you could lose it all when you go to sleep. I honestly don't think that way anymore. I might have in the beginning, but I thank you for bringing it up because it reminds me of those dark days, if you will. I don't have that psychology anymore. I honestly believe I know what I'm doing. Even if I don't, and it's random luck, I honestly believe that I study macroeconomics, I study economic indicators, I study trends, I study technical analysis. Anything can happen, especially like giant global earthquake, an asteroid hits, a volcano erupts. But those black swan events, like terrorist attacks, they can happen at any moment. I can't plan for them, but I can protect myself from them. But it's almost, right? It's almost not likely. Like, I can't plan for it. I mean, moving stops and stuff helps, but like, it's not a variable. Okay? It's a possibility, but it's so slim that, I mean, look, I have stops. Put it that way, right? I don't trade naked, for example. But the trades I make are so well thought out. Not well meaning like if I know they're good, but I've spent so much time planning and thinking and analyzing on logic, right? Like that, in my humble opinion, I know exactly what's going to happen. Even when I lose money. Like I took a trade last night and lost 33 bips. I'm like, okay, well, it's fine. It's a shot, okay? But is the account going to blow up overnight? Am I going to get knocked out of all my positions? I'm up 1,300 pips, and if I go to bed, will those pips be there tomorrow? Yeah, they'll be there. Could it be down to only 1,000 and it's a really bad move? Yeah, but you have to understand too, I also, using tools properly, know where these prices are likely to have those types of responses. Right? So I suppose I believe my own nonsense enough. Okay? But is it a risk that I can give back? Yeah, but I've already, let's say it another way. When I took the trade, I was targeting here. So now that we're halfway there, should I panic? Well, I could. Okay? But Martinez, it's my plan. It's not a random walk. Would I let this head all the way up here? Yeah, I probably would. I might change my mind along the way. I can do that. But look at the technicals, like for crying out loud. Look at the technicals. Okay, like, why would I get out of this? Let's talk about this. Is that down or up? Down. I'm going to make money. On top of this, I already have an opinion of why the Rand is gaining strength. I want to buy Rand. I love the Rand. I have a thought process behind that. On top of that, I know the dollar is not, right? Like, I want this to be weak. When it was strong, I said I want it to be weak. And so this whole plan is based on my analysis of the US dollar, its economy, its central banking policy, its role in macroeconomics, actual macroeconomics data, and on top of all of that, the normal ebb and flow that we call seasonality. So I didn't want to sell the dollar here, but this was my first real opportunity. Lower low, lower high, sell it. I do want to be short dollar. I do want to be long rand. I have 9 reasons why I want it to head this way. So should I get out now because I have 200 pips? Who gives a crap about 200 pips? That's chunks of corn in a field. Okay? You see that? So that's how I sleep at night in the sense like, dude, this trade is worth thousands of pips. Thousands. This one trade. Or it'll come back and I lost nothing. Okay, that's where I am right now. Okay? Okay? So it's not a day trade, Martinez. Now, if it was a day trade, I would have bailed. If it was a swing trade, you see this, guys? This, right? This right here, maybe you can't see it, but anyone that's gone through the swing trading course knows this to be like absolutely a million times over a sell. Okay? And if you sell there, and because this is the kicker, this is the target. So that is true. Martinez, if you know how to swing trade, you took this on Monday and you would have exited on Wednesday, Thursday, right? That's true. And I could then abort my longer term plan and take the money off the table. I totally could. Okay? Now, the funny thing is, 200 pips isn't going to change my results that much. It's only 200 pips. Yeah, it's a good trade. It's a weekly trade. But we get trades like this all the time. It's a basic swing trade. Right? How many people here have completed my swing trading course? Where are my swing traders at? How many people have gone through that and finished it? Hey, Brad, I like that. Be rad. That's a great license plate. Yeah, lots of people, and everybody here knows that. Okay? They look at it, and that's like as easy of a trade as you'll ever see. It doesn't get any easier than this. So I look at them like, that's an easy trade. Okay, so we hit the target. Great. Should I take the 220 pips or whatever it is? I can, but you know what? Trading's so hard. Why don't I just let it run for another 220 pips? But it's a choice. It's totally a choice. Which one? I don't know. I don't know what the right choice is. Okay? But I look at them like, you know what? I think this has legs on it. I think there's longevity. I love the good people of South Africa. I'm lending them money. I'm like, oh, no, keep it a little longer. Just keep paying me my interest. Right? Like, this should work out. I put a lot of thought into it. Okay? It should work out. I'm probably good. Okay? So, if I were starting fresh, I would say this is what's going to happen next week. So, I have to try to add this. So, my risk here is this. This is what's going to happen next week. Actually, let me do this more specifically. This is what's going to happen next week, and this is what's going to happen the week after. So in 2 weeks from now, I'm going to hit my target at 14. That's what it says. It's not even my opinion. That's just what the chart says. Okay? Was it Martin or Martinique? So, yeah, that's how I do it, right? So it's not like, I mean, I could take the money, but I'm not nervous. What if it comes back and I lose a bunch? Yeah, well, it's almost certainly going to come back. So I could, yeah, I could take my profit. But I don't know. I think I've decided not to. Brinsley says, "Hey, take profit on the M1." Well, that's another part of my decision-making process. Do I count this as an M2, or do I count this as an M1? Or sorry, central pivot. So I really screwed this up. Let me try it again in using correct terms. I have to decide whether this move was set up. This move meaning the move that I'm in. Is it an M3 that was a front run about a week early? Or am I going to declare it a central pivot? See, if it's a central pivot, then I'm going to S2. But I think you're right. This is probably an M1. This is an M3, so the target would be M1. I'm just going to Arctic turtle the trade and stretch out for 14. Okay, 14 is right in the middle. So most likely, like just the way I drew it, most likely this is how it's going to go down. Okay, it's going to come up, it's going to come down, hit target, it's going to go up, come down, and hit 14, and then I have to decide, am I out? I think if I can get this over 500 pips, I might still not take profit. Okay, I might hold this till the end of the year. So with that psychology, why would I get out now with 200 pips? Like, right? I might stay into the end of the year. I don't know. We'll see. William's doing the one on FX Street for €35. Sweet. Last Samurai says, keep trailing the stop. Yeah, I'm more interested in the seasonality and the fundamentals of it than really the technicals. So I made a trade, what was it, 2 years ago? I was in it for 10 months, I think. Okay. I made 1,000% in IRR. Okay. And how many pips did I make? How many pips did I make in that one trade over 10 months? One trade. Remember, that's 10 months of doing nothing. Yeah, I made 0 pips. So we call that a carry trade. And I took it to teach you guys how to do a carry trade and discussed it in great detail. And then took it and then said, I'm going to show you how to be strong and hold it. So there's a little bit of that going on. I won't make, if I held this for 10 months, I would only make 200% IRR. So that's not a lot relative, but that other trade was a euro, Turkish lira back when it was tradable and all that kind of stuff. But if I can just hold this trade for a year, I'll make 250% internal rate of return, plus any pippage that's left over. So which one do I want to work? Well, I see that this is going to have a problem in here, right? You see that? As we get closer and closer to 1450, right, this is going to be more and more of a problem. But that's why I have to analyze the fundamentals and the seasonality of the dollar. So I know, in my mind, in my opinion, in my humble opinion, I know between right now and April 1st, the US dollar will become very weak for a long period of time. So I'm in early, I understand that. And I told everyone that I was thinking about it on February 1st because based on this idea, if there's a middle ground, so from February 1st to April 1st, there's a middle ground, which we'll call March 1st, then I have to decide, is it going to happen in the average? Between February 1st and April 1st, there's March 1st. So is it going to happen March 1st? I'm like, well, it could, but that's average, and nothing is ever average. Okay? So then I say, well, is there February 1st? Should I get into the trade early in the period, or should I wait till the end of March and then make the trade? Well, I don't really know, but I can say, well, what would impact dollar weakness? And it would be the attitude, the discussion of, the pricing in of the $2 trillion Biden package. So the news I got today from Bloomberg is that they are going to pump out the $1,400 checks, probably before April 1st. So if that actually becomes the truth, and when traders decide that that's going to be the truth, then it becomes the truth. And when the truth hits, the dollar will weaken because it's simple, right? Let's go back to here. Template. I'm going to lose all this analysis, but I'm okay with that. Blank. Okay. So it's simple, right? So we're saying the US dollar will weaken. All right. So here's money supply. Okay. This is the value of the dollar, the purchasing power of the dollar, and this is the quantity, right? So quantity 1, 2, 3, 4, 5 trillion, whatever. The value, the purchasing power, 1, 2, 3, 4, 5. So if you understand this right, if the purchasing power goes up, then we will move this way. And then quantity, if the quantity of money goes up, then it'll move this way, or vice versa. Okay? So think of it like purchasing power parity. Okay, we will keep demand constant. Okay, so now we're looking at the long run. Demand, right? So what this means is if the purchasing power of the dollar is very high, you don't need very many dollars to buy stuff. Okay, great. So now we'll go over here and we'll create an equilibrium and we'll call this supply 1. We'll call this currently the amount of money in the world, or the amount of dollars in the world have this value. So currently there's 3.25, and that has a purchasing power of 2.5. Okay, so now we're talking about the government literally, in this case, it's the fiscal side, not the central bank. This is literally the Treasury now. The Treasury does print money, by the way. When they say the Fed is printing a bunch of money, it's not true. The Fed doesn't print money. The Treasury prints money. Well, now the Treasury is printing money, okay, in this case. And they send out every American that makes less than, I think it's 75 grand, they get $1,400, okay? So that means that $1,400 didn't exist. It's not like the government earned it. So they've increased the supply, okay, from this equilibrium of 3.25 to this new equilibrium, 4.25. But look what happened to the price, the value, the purchasing power. It dropped. So that's in my play. If I get all that correct, if all of this comes to play, all the hammers click, the dollar's going to get weakened. The dollar will weaken. And I'll make money on my USD Rand. Okay? That's just the money supply play. But we talked about this 3 weeks ago. I was selling Euro Rand, and I said, that's only working now, but that's not even the good trade. That's a mediocre trade. Because when this stuff kicks in, euro dollar is going to go up, euro's going to gain value, the ECB is going to get crushed and cry, and my euro rand, which are now up, 800 pips or something, is going to turn out to be the mediocre trade. So right now, my USD rand only has 200 pips, but I've only been in it a week. Give it some time, son. Right? So I'm up 200 pips for the week, but I think if all this comes together on the longer run, I could probably make 2,000 pips. So should I take profit and bank the 200 pips? I could. It's not a bad idea. It's a perfect weekly swing trade. It's all good. So it comes down to my conviction. I know I'm a bit early. I know I could be afraid. But I'm not, I guess. So, but I am going through the thought process, and that's why I thought it was an interesting, opportunity to talk about the psychology of it, because I don't have that psychology, but I do identify. I remember when I was afraid as a trader, right? I remember that. But you reminded me, and I thank you for that. Okay, so right now, if we get through that, it's going to be a big winner. Okay. Have I always excelled in mathematics and economics? No. No, I'm self-taught in technical analysis. I'm self-taught in fundamental analysis. I really kind of was exposed to the fundamentals when I was preparing for my CTA Series 3 license. And it didn't actually help me as a currency trader, but it introduced me to the thought process. So when you become a CTA, you spend a lot of time preparing to say, if you're a grain elevator operator and you bought a bunch of wheat from farmers and you're worried about the price of wheat dropping and you're going to use options, what kind of option strategy would you hedge to protect yourself from the downside, right? And that kind of stuff. And what would that cost you? And what is the opportunity cost? Or what kind of trade is Kansas City wheat versus Chicago wheat? What kind of trade is WTI futures and nat gas futures? That's a crack spread. And then what is the strategy? Do you want the spread to narrow? Do you want it to widen? That kind of stuff. You spend a ton of that. And of course, regulations. Oh, well, this piece of paper you must save for 5 years, but this piece of paper you must save for 3 years. And this piece of paper you don't save, but this piece of paper you save for 2 years. And you have to keep all that crap organized. And then so I hired a compliance company to do all my clients' compliance for me, and they screwed up too. I guess maybe it's overly complicated. My compliance company struggled to keep up with the amount of compliance for a tiny little hedge fund. Just amazing, but there you go. So now I'm actually formally trained now. So now I have a macroeconomics degree from Harvard. So I can tell people, well, I'm self-taught, and people are like, oh, I don't really like self-taught people. Now I can say, oh, I have a macroeconomics degree from Harvard. And they're like, really? Wow, that's good. You're an expert. I'm like, I know, right? But the Harvard side of it was actually interesting, not on a trader type basis, but to really go through all the theories, the history, the models, the calculus, the statistics, in a formalized fashion. I guess even the philosophy of economics, I spent a lot of time studying, was really interesting. It was really interesting. I am more educated, but probably not a better trader. But it's nice to have, right? William says it's simple macroeconomics to be fair. Of course. Of course. So like right now I'm teaching traders macroeconomics, but I'm skipping all the calculus. But I think it's important as traders and investors that we understand the concepts. We understand the model. You're like, oh, that's why. But I don't think we need to get into the calculus. Okay? It's just unnecessary. All right. Yeah, so here's the trade I failed on. That's why I guess the chart's here. I bought it in, I think, here. So you have to understand I was in Asia trying to front run the daily. Okay, so I looked at it as higher high, higher low. Now plan B would be this one, right? So it's just I had a shot, I took the shot, dropped a stop, went to bed, woke up, not in it. Negative 33. Okay. That's all. I know it was mediocre, but it had a chance. I was the open man. I took in with the ball, so I took a shot. I understand, but see, if it had worked, we would all agree, oh my God, yeah. Because it hasn't worked, then now we're thinking this. But truly, and I guess I probably should have been a little more focused. I don't know. I believed myself at the time. That really we were sort of in this, in like a wedge. But if it was an inverted wedge, you'd still buy it, right? So I don't know. I was a bull. I bought on a daily central pivot in what I thought was a higher high, higher low scenario. But of course, we know it's fib wars, right? So the fib wars is 618 this way. Okay, bears think of it that way. So a bear is targeting the 200 and will take the next shot here. So here's what a bear is thinking. Okay, pretty obvious. I thought this at the time was our support. I thought we got we got a nice move here yesterday and that it would continue. So I lost a little bit. But it's meaningless. The whole point I'm trying to get you guys towards is that you want to reduce your risk, have longer term outlooks so that your trades are less susceptible to any form of luck, good or bad, and that your losses are so tiny that you don't even really notice. You're like, oh, what happened to that Kiwi yen trade? Oh, yeah, that's right. I day traded it and it didn't work out. Right? Turned out it wasn't yen. I was worried that it was a yen move because, and again, if you're in the swing trading group, we must have spent 45 minutes yesterday talking about yen seasonality. So it could have been important. It looks like it was more Kiwi related and all that kind of stuff. So, whatever. My other trades didn't do anything. I just collected my interest. So, right? You should be able to have several losing trades, but your winners are so well planned and you're squeezing all the juice out of them that it's inconsequential if you lose a couple hundred pips a month on losing trades, because you're making much more than a couple hundred pips on your winning trades. Like a simple, basic little swing trade is typically close to 200 pips. So you could have, 8 losing trades and it'll come out to like 250. But that's like one or two decent winners. You could have 6 losers, 2 winners, and you're way profitable. Only if your trades are worth something, right? They have to be worth running. Okay? If you can be in the trade longer than a couple of hours, then you got some potential, right? Wayne, when it comes to central banks, besides statements, meeting minutes, speeches, what else do you analyze? Nothing. Daniel, the only thing that matters, and I know you're struggling with this because you're asking good questions day after day, but you're missing the point. What is the policy? Are they going to change the policy? That's it. What do you need to read to make that decision? I don't know. Nothing, everything. Somewhere between read nothing or read absolutely everything, all 10,000 downloads on their website. You have to understand what their policy is now and when the market believes they're about to change the policy. That's all that matters. Okay? So you have to just know that. Do whatever you need to do to get that done. Okay? Therefore, you understand the why. Yeah, Brinsley, the interesting thing, Brinsley, is let's say you make 30 trades a month as a day trader. When you add up the amount of money you make at the end of a year, so you make 365 trades a year, how much profit do you have? And for many people, it's almost nothing. But let's say 10% of those trades you were able to hold at least 6 months. So 90% of your trades are still just day trades and stuff. But let's say 10% of your trades you held for 6 months. I bet you anything you'll make more money. And the cool thing about a longer term trend is the one day you take the trade is the one day you work. After that, it's on autopilot. It's going to land where it's going to land. Maybe it's not even an autopilot. Maybe it's like a Scud missile. You spend all your work driving the stupid thing out into the desert, and you're like, this sucks. Right? And then you got to spend a whole afternoon setting the stupid thing up. You're like, this thing's making a bloody headache. And then boom, you fire it, and you're like, okay, we're done now. And it's going to go, and gravity takes over, physics takes over. It's going to land where it's going to land. Nobody really knows, but you have a general idea. So it's sort of like that, I guess. This isn't laser guided. I don't know the exact time, the exact price. But I'm throwing the ball, and it's going to land out there somewhere out in the end zone. I'm kind of aiming toward the corner, back corner a little bit on the left side. But, you know. Okay? Once it's in the air, you're done. Now you pray for somebody to catch it. Ideally, someone on your own team. Specifically, someone on your own team. Okay? Holding it is not the problem. The question is, did I enter at the right point that I can hold? Well, yeah, but that's why you do analysis. Right? That's exactly why you do analysis. There's two things. You have to know why. Why is it going to trend for a long period of time? Okay? You have to know the why. It's not even that you know. It's that you've decided, you think, you believe that. For whatever reason. It'd be really great if you could, in the Western world, we like to use the number 3. Give me 3 reasons why you think the South African rand is going to increase in value. Doesn't even matter if you're right. It's just you believe it and you got some sort of something for your, science-based, approach to your belief. Great, good. So now, right? So now, all you need is technical analysis. Now, my technical analysis may be better than yours. I have nearly 20 years of experience. I also, on top of fundamentals, I look at macro, and on top of macro, I look at seasonality, and on top of all of that, I have my years of experience. So maybe I make better decisions, but you can make the same decisions or even different decisions and still make money. I'm convinced of that. It's not about how right or how accurate or how good. You just have to do your job. Many people in the beginning, they don't know what the job is. They don't even know what the job is. They think, sit down, make a bunch of trades, make a bunch of money. And of course, if you make a bunch of trades and you're up 22 pips for the day, you're like, dude, I got to jack up my lot size because that's not real money. And the problem, the reason you're not making a lot of money is that your trades are worthless. The crap. You worked all day to make 22 pips? That's garbage. That's the issue. Not your lot size, like, well, I can make 22 pips every day, so I'm going to jack up the lot size. Fail. Just epic fail. Okay? That's all technical analysis is. If, for example, I thought Kiwi dollar was going to fall for the rest of the year, could I be shorting it now? Yes. Okay? When do I gain confidence in it falling all year? Well, a breach below that is surely a flag, right? A flag to say, okay, son, time to get your game on, right? Like that's what technical analysis is. So I'd say, okay, yeah, if we breach this 75, I'm going to let it, or I guess 75.50. I'm going to let it come down and then I'm going to sell the bounce because I know it's wrong. Why do I know it's wrong? Well, I did some sort of analysis to tell me it's going to be bearish and it's going to be bearish for a long time. So I need a lower low, lower high, lower low, lower high, lower low, forever and ever 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 and ever. I'll sell all the lower highs forever and ever and ever. This is the first real challenge. Sweet. What's the next real challenge? Well, again, this is just simple technical analysis. So let's look at it from a bearish point of view. Let's start with position trading bearish bias. I can tell you, you're early in the game, but you already knew that too. That's why you're cautious. We know you're early. That's cool. Don't worry about it. So it only shows you that this would be the ultimate trade. And why did bulls get out here? There's a technical reason for it. Okay, great. Cool. So this is a little out of control. You really don't have the great monthly, but remember, you told me it was going to fall for the long term. Could be months and months and months of falling. So you could look at that and say, ooh, that's what I want to see as a bear. But that also tells me I'm early. So I got to go in cautious. I can't go in all guns blazing, right? Shooting bullets all over the place. Okay? But it's a sign that the storm is brewing. Can you participate? Yeah, but just don't be confident. Okay? But that's the beginning. Okay, great. Now let's swing trade it as a bear. Now remember, the swing if you get the swing, it's outside of the monthly. So your layers are not overlapping yet. But a reversal is born on the short term before the long term. But if you study the long term, you know where it's likely to occur. So now we're like, okay. And by the way, many of you in the webinar right now, in the live stream right now, you know I expect the yen to get strong soon. So there's part of this belief actually happening right now. And so it makes sense to me that the monthlies don't line up, but I'm certainly going to use the weeklies. So I'm going to do now swing trading bearish, knowing that I'm early, okay? But I have permission next week to do this. Okay? And in fact, this is the weekly sell zone. It's not perfect, but remember, we know we're early. Of course it's not perfect. Okay? But what are you going to do next is the much bigger question. If you don't know that now, you have already failed. In fact, many people would have done this yesterday. Okay? They said yesterday, there's no way in hell this is going to break 76 to the upside. Why? Because they already had it planned. They already had it planned before yesterday. That is the message I'm trying to get across. They already made next week's trade yesterday. Okay? Okay? Well, we're in this part, Martinez. We're in this part of it rolling over. It's a rotation. So for those that are bearish, remember, I'm still long-term bullish. I'm aware the bearishness is going to arrive, and maybe now, maybe a little bit later, but we're in the transition. So when do I give up on my trend? Well, not until the trend has failed, and maybe that happened last night, okay? Now, I did this because I'm still a bull. There are others that are bears. So that's why I started with this conversation, Martinez. If you are a bear, because we have different time frames, okay? I expect the Japanese yen to be strong in the middle of February to the middle of March. I must have said that 100 times, okay? I still expect that to be true. And we're getting close. I know it's coming. But I'm not going to change until I see it on my time frames, because I'm still a long-term bull. But you might not be a long-term bull. See, what I think isn't right. What I think is just what I think. I don't know if I'm right. You don't know if I'm right. You might totally agree with me, maybe because I'm persuasive, or maybe you totally disagree with me. It doesn't even matter. Okay? It doesn't even matter. So, someone else, even though I bought last night, someone else knows it's going to fall. That's what they think. Which is perfectly fine, Martinez, right? But the basis of their same trade last night is selling it off 76. I thought it could, it might, but that's why I day traded it. That's why I didn't swing trade it, okay? So it's a pissy little day trade. It didn't work. Yeah, well, that happens. I had technical reasons, but even more now, Martinez, is that the technicals did fail, and that is interesting. Okay. And that's from a bullish point of view. Now I have to say, oh my God, back off. Okay. So now someone else is taking it to the downside, and I understand why they're doing it, and I don't even disagree with them. So what they're doing next is this. How long are they going to do that? Well, forever. until they stop. So I don't know when Japanese yen repatriation will start, and I don't know when it'll end. I just know generally when it'll occur. Again, it's like going out to sea. You generally know where the current is and where it's going to go, and even really how fast it's moving, but it takes a while to find it, even though you generally know where it is. Okay? So anyways, so this starts moving down. Remember, nothing on the chart says it's going to happen yet, but I think it's going to happen. Great. So at some point, I have to recognize I have to back off my bullishness. Someone else has to recognize they need to fire for effect and drop some bombs on this thing. Okay? We're both right. Okay? But I know how they're going to trade. That's the cool thing about knowing how to trade. I know how they're going to behave, so I can plan for that. Okay, so if we breach that, what's going to happen next? Well, once again, it's going to make, let's say it makes a lower low today. Okay, if it makes a lower low today, let's say to that. Now we have to adjust our pivots because the pivots are based on the high and the low and the close. So that math says this will move to here, that will move to here, and this will move to here. So therefore, next week, all these bears are going to do this. Up to 75.5 and drop it down to 74.5. Done. That is absolutely going to happen in my mind. So, what should I do if I see something like that happen between now and Monday? Maybe I should do it. There you go, Marina. It's all yours. Lead the way. Charge! Right? Steve, that was the website for the central bank. It was literally the website. And then it says here, like it was the homepage. Steve, it was actually the homepage. And it's like, and like that's what I said where I said, who actually read the statement? Like do you even have like a general idea of what was said? And they're like, no, I didn't download it. No, I didn't. It's too much work. I know it's important. You tell me all the time, but I just don't have the tenacity to download it. I don't have the skills or background to understand any of the mumbo jumbo of what it says. Then you just go to the home page and you find out it takes you less than 10 seconds. They actually tell you in plain English in bullet points. We thought this, we said that, and you're done. Literally 10 seconds worth of work. But 95% of traders don't have the time or the skill to do it. And that's the part that I was laughing at. Like, dude, like, seriously. At some point, right? At some point, people have to step up and do the damn job. They're so focused on getting rich quick, but they're not interested in creating value or actually doing the job. Well, that's why they're not going to get rich. And certainly not quick. Well, actually, Daniel, I like one of the fun things, especially when the weather's good. I'll print out the report, okay? And actually, in my opinion, some of it, now I'm an economics geek, right? So I geek out on this stuff. But I'll go out on a beautiful, sunny, warm morning. The birds are chirping. I got myself a nice cup of coffee, okay? And I have a beautiful cigar. And I've got my central bank reports. I might have, very often I have Barron's magazine, right? That will have sort of economic updates, the calendar for the week, all that kind of stuff. It's interesting. And then I sit down there and with a highlighter. And there's something about that, Daniel, and you bring it up and it just spurs so much, a positive response. So I've trained myself through a reward system, like wake up in the morning, beautiful sun on your face. The birds are singing. Have a beautiful cup of coffee, aka drugs, right? And a beautiful, fabulous cigar, aka drugs. Even the vitamin K is probably drugs, right? Like endorphins, right? You get endorphins in your brain. Positive, you like the sound of birds because it's better than tigers. You like the warmth on your face because at night it's freezing cold and horrible, right? So we release these endorphins, these dopamines, right? As a happiness, a reward. So cigars and coffee do that for me too. And meanwhile, I take out the highlighter, and I have multiple colors usually, right? So check it out, right even here, I haven't even opened it up because I already got one open. I always have these multiple colors, and you go through the report, puffing away, sipping away, and you highlight. Ooh, that's important. And it feels so good. It's a reward. You see the color. And I'm like, I'm a currency trader. Like, I love this. This is what I do. This is so rewarding. And other people are like, that's too hard. I don't have time for that. I'm so busy making money. The funny thing is they're not making money. So they're so busy losing money that they don't have the time. So I've taught myself to enjoy the work. Yeah, but you guys can't get off the dopamine stuff. Just the preaching that you don't do drugs releases dopamine. It makes you feel good. So you're still finding your dopamine. Trust me. The Bureau of International Settlements, what was that one for? Natural induced dopamine. Yeah, most people don't have it, though. Most people don't have it. But yeah, it is better for sure. At least I know I'm not fooling myself. I'm not saying you are. I'm saying other people, right? I'm just like, I know I'm doing it. I understand. Okay? But that's how I do it. I'm like, how do I teach myself to enjoy doing the work? Well, that's how I do it. Okay? Remember, too, you have to do this for 30 years. So you have to stay excited, enthusiastic. You have to enjoy what you do. You don't want to cut corners. Right? All this kind of stuff. So whatever stress to make sure you get out of bed to do what needs to get done, then do that. Okay? Looks like it's about 9:30. I'm tired. It must be Friday. Holy smokes. All right. Woo! No, no 500 likes today, huh? Yeah, we can do pound yen. I guess we were just there. Duh. Okay. So exactly the same trade is the Kiwi yen trade, but Kiwi yen failed. So that's why I'm like, I made the right macro play. So let's go back to that for Martinez as well. I made the right macro play. I don't give a damn about the Kiwi, but I bought the Kiwi. What I was doing was selling yen. In this case, pound yen went up. Kiwi yen went down. I bet on the wrong horse. Okay? Stupid horse tripped. Okay? But if I had only done pound yen, it would have worked out just fine. And that's the macro side. I probably would have done okay on many other trades. I picked the worst horse, and I don't know why. I mean, look, I sold the yen. I had a technical reason for the Kiwi. It was not a bad trade. I lost money. I'm not ashamed. But this one worked out just fine. Right? So, like, dang it. Dang it! Okay. And this shows you the front run strategy too, right? Notice that, okay. I should probably redraw this because it more specifically, it looked like this. Okay. Here's the bottom. Here's the top. Here's the retracement. Gone. Okay. And look at the role reversal, the front run. Okay. Many people are not even aware of this yet. They're going to show up on Monday, and maybe they know this used to be the buy zone. I hope you appreciate everything I'm teaching you that gets you into your trades 2 days before everybody else. I hope you fully appreciate that. Well, I've never read a book on trading, so I don't really know. What advice for reading to study behavior for the market? I guess you'd have to read a behavioral finance book. My programmer said he was going to get out of the hospital on Sunday from his COVID treatment, and that we would have a meeting on Wednesday, but he didn't show up on Wednesday. He didn't ping me yesterday. I guess I'll ping him today. But yeah, so we will get that going. Yeah. Thank you guys. I see your notes there. I'm overdue for a trip to Boston. I'm overdue for a trip to everywhere, but Boston's another one. Sophie, I think you're out in that area, aren't you? Yeah. Do you know Stanzi di Sigari? I think is what it's called. Sigari di Stanzi di Sigari. Stanza di Sigari. This is my cigar bar in Boston. Temporarily closed. Stupid COVID. I wonder if it'll show pictures. So once it's open, maybe we can meet up there. Hours and locations, offerings. No pictures, huh? It's so funny. Offerings is just going to be their cigars, private events. No pictures. What kind of idiot builds a website? There's the front door. You have to go down to the basement. What kind of idiot builds a website and doesn't put pictures on it? Okay, they come to the website. What do they want? What are your hours? Okay, I guess here. Like, is it open? Where are you located? So I guess that's okay. It's not on the first fold. And then the other thing is, like, is it a nice place, or are they going to sell me a Bob Marley flag and a bunch of bongs and pipes for smoking weed? Like, is it a nice place, or is it? And like, so you should have pictures. There's the giant cigar out front. Anyways, you'll have to look it up. What is this? Bento box. It's amazing how poor so many websites are. But it's on North End, if you know it. It's one of the last places. It's been there so long that the government can't shut it down. Very neat place, actually. Bombardier, actually, they just laid off like 10% of their workforce, maybe more. Peter, yes. Most likely, Peter wants to know if the macroeconomic course is going to be end up on the FX Bootcamp side. Yes, and more than likely, I'm going to repeat it live and re-record it as well in the summer. So I might launch another summer school and do sort of like a live version, right? A live version of summer school this summer. Oh, right on, Roderick. That's cool. Knew nothing about macroeconomics. Yeah, I hope the training is thought provoking. I'm always a little worried, or not nervous, but a little worried that if I cut out the calculus, then there's not enough meat. But hopefully the concepts are enough. But so I kind of feel ambivalent. Like, I hope it's enough. I hope it's not too general. And of course, we have a lot more to cover. So today I'm going to work on the balance of trade and then setting up for the lesson after that, business cycles. Right, so literally we're talking about two economies negotiating trade agreements and why they would do it in the first place and how they can improve their economic situation, right? USD Swiss franc. Let's take a look at USD Swiss franc. Okay. Dollar was weak but has gained strength. Swissy was strong but has lost strength. It's probably going to be mediocre. Okay. So we'll take a look at this. This is the dollar sort of recovering off the bottom. So how would you want to trade this? I would avoid all of this, but let's take a look at a basic swing trade, right? Is this, yeah, swing trade. If you were swing trading USD Swiss franc, if anything, this will show you the ebb and flow between the bulls and the bears, right? Like here's an obvious entry, here's an obvious entry for a bull. This move is not obvious. Holy smokes. But that sets up a counter trend. There's two counter trends that I teach. This is one of them. So it's a difficult trade, but if you were a bear, it doesn't make you a bear. This should make you take profit. If you were already a bear, you would take a shot, you'd put a stop above here, you wouldn't risk much, but you'd try to drive it back down, in this case to the M1. We didn't quite get to the M1, but what did we get to? Back here. So now we have mediocrity. Okay, a bull is going to buy, a bear is going to sell, and they're probably both going to get disappointing results. So a bear is going to try this. And of course, they could get that. That looks fine. That's what they're going to try, which means probably right now or later today, or maybe Sunday, you'll take your shot. Is there a psychological level in here? 89.5. Okay? So if you're selling around 89.5, you're saying Bulls are not allowed to take it above 0.9. Okay? It's the 90000 so important number. So bears are going to say, no way, Jose, you can't have that. Okay? So we know bears are going to sell two prices, 89.5, 89.80. Okay? That's that. So you have to decide on a Friday or a Sunday, if you're at one of these prices, are you going to take the shot down? Okay? The flip side of this is this. That's what a bull is going to look for. Now, they only have the one buy. That's all they got. It's a one-hit wonder. Unless it does open on Sunday at 89.80, they're going to try it at 89.50 as support, not as resistance. Okay? So their two trades are going to look like this. Okay? The problem is, to me, this is meaningless. I look at that and say nothing happened. Okay? So it's going to come down to your conviction. Okay? It comes down to what you want to do. Okay? So if you're going to trade that longer term trend this way, then it's set up last week. That's the reason it happened. And therefore, if that's true, like I just highlighted, a bearish trend trader is going to sell it here on those two prices I just highlighted, 89.50 to 89.80. To simplify, I offer a template, and we would call it this. Weekly swing trading bearish bias. And we already have it outlined. 89.50 to 89.80. Okay? So now your choices are you going to sell it Friday near that price? Or are you going to wait till Monday for that price, for something in there? And that's your decision. But the thing is, if you're a long-term bear, you're not biting your fingernails saying, should I buy it or should I sell it? Should I buy it? Should I sell it? You can only sell it. And here's the interesting thing. Based on our monthly analysis, this was the right place to sell. People didn't see it coming because they're not looking at the right time frames. So this is actually the second or third trade a bear would be making on this. I'm not so sure. Not that this isn't right. This is right. I just don't like the pair based on historic baggage that I have from 10 years ago. But we could look at a position trading bearish. Okay. And that's no good. We can look at it position trading bullish. Okay. And that's no good. Okay. So now we got to fold all this. And you notice it's this transition period that creates that where the monthlies are gobbledygook. So you got to drill down. And this is what we worked on 2 weeks ago in the swing trading group. You got to drill down. You have to throw out the monthlies and focus on your weeklies and your dailies because you're anticipating this rotation, right? So now you say, well, what about swing trading bullish? Oops, maybe that's why. Let's do it differently. Position trading bullish. Okay, there we go. So what occurred here? This is now the monthly going back to why this rotation this way. Well, all the bulls had this as a buy zone, and this was their exit. Isn't that cool? We hit their exit, and that's the next counter trend trade. This is the second counter trend trade of the two counter trend trades in the training course. And this one brings us back down, okay? I just don't know if it's going to follow through. That's just me because I don't have a fundamental conviction. I see it technically. I don't have conviction for the fundamentals. So you just have to be very clear on what you intend. Do you intend for this to fall next week? well, then you have to say these bulls will never buy it back. These bulls are dead. That was just what happened in January. Okay? And by the way, in January, we did expect USD to be strong. So now you can say, well, that's it. That's the end of that. And so now you're going to look at this a different way. You're going to swing trade this bearishly. And there's last week's trade. And there's next week's trade. Okay? And that's that. Okay? And for me, if I had to be anything, I would be a bear. But I don't like it. It might look technically good to you, but I don't like it. But you can trade it. Okay. All right, I feel tired. I'm spent. It's, 9:45 in the morning. I need a nap. So anyways, thank you for being here all week. I wish you the best. I hope you understand I want you to succeed. I also need you to do the work because you have to earn it. Yeah, Daniel, maybe I just ran out of dopamine, huh? So I need you to do the work because I want you to create value, and one day people are going to rely on you to do the work. So you might as well get to the point where you actually enjoy it and you take pride in what you do. I want you to be an artisan, a craftsman. Okay? Because it's a lost skill. People just don't do it. They do the minimum. Now am I done? No. Now am I a success? No. You're going to be doing this every day for 30 years. It doesn't end. It's not like you figure out technical analysis and boom, you're making money. It doesn't happen that way. There's a lot of work. You need to constantly do it. And there's always something you've never seen before. And you're going to have to make good decisions and not be reactionary. So it will never end. It will never get easy. I have to keep telling you, I don't know the answers. I don't know the future. So it comes down to me doing the best analysis I can to make the most informed decisions and then manage that risk the best I possibly can. I don't think it ever gets easy. So you will have to work hard for the next 30 years. Now, if you do it right, there'll be a pot of gold at the end of your rainbow, and you'll be fine. So peace on earth, may the pips be with you, may our profits be above average. Cheers. Thanks for being on my team, huh?